Welcome to Talk to Me Like a 5-Year-Old, a series where Prosperity Mortgage's Corinne, Guerra, and Berkshire Hathaway's Home Services Chicago's Desai ask and answer a few basic questions about the home buying and loan application process. What is a loan officer / mortgage consultant?
So a mortgage consultant and a loan officer are the same thing. We have different names for what we do, but basically we're here to help people get approved for their financing to buy their next home. That loan is called a mortgage, and what we'll do is we'll work with you, have an application filled out, and then we'll qualify you for a home that fits your budget.
Why is it even important to speak to a mortgage consultant or not?
It's important to speak to a mortgage consultant. It's really the first step that you should take in purchasing a home. Get your money secured, ready to go, have that letter available so that when you're ready to find the right home, you can show the sellers that you are approved for your financing. In addition to that, it's going to give you a lot of information and tell you what your payments are going to look like and your closing costs, and also just in general educate you about the process of buying a home.
When is it important that I speak with a mortgage consultant?
I always recommend, especially if it's your first time buying a home, talk to a mortgage consultant even a year before you're ready to buy a home or you think you might be ready to buy a home. Get prepared. A lot of people these days, it's very normal for you to feel like you don't know anything about the process or what's really required and what information you can trust on that internet. So talk to somebody about that a year in advance. Get prepared, know how much money to save. I would say it as a minimum to get ready and get pre-approved before you're ready to buy a home. I would say at least 3 months before, just in case there's some things that we can do to put you in a better position for qualifying for the loan. Of course, life doesn't always work in that way, so sometimes people find the home of their dreams and then have to scramble to get pre-approved. And a lot of times we can make that work, but sometimes it takes a little longer and you might miss out on that home if you're not prepared.
How long should I be employed before I apply for a home loan?
So in order to buy a home, if you're a salaried employee and you just got a new job, but it's in the same line of work as you've had experience in for at least the past 2 years, that's okay. You can buy a home right away. In fact, you can even be in the process of purchasing a home right before you start your new job, and we can usually make that work. Again, it depends on your experience. If you have an hourly rate, you're paid hourly or inconsistently in some way, then we may want to have 3 to 6 months on the job just to understand what you're able to receive consistently in hours for your pay. If you have inconsistent income, such as commissions, bonus income, or if you are self-employed and paid on a 1099 instead of a W-2, we're typically going to require that you have a 2-year history before you can qualify to buy a home in order to have what they consider employment stability. And then what we'll do is we'll take that 2 years of employment and income and we'll average it out to come up with your qualified income.
How long was my pre-approval letter last for?
Yeah, this is a common question, Desai. So a lot of people think, oh, if I get pre-approved, it's going to expire by the time I really want to buy a home. Your pre-approval, as long as you're actively shopping, can last up to a year before we might have to update your credit report or even just have you go in and fill out a new one, which doesn't take very long. So don't worry about the pre-approval expiring.
I was recently married. Can I use some of the wedding gifts I received as down payment on my loan?
Yeah, getting married before buying a house is kind of a common thing. It's not really going to affect it too much. However, we do want to look at where your assets are coming from for your down payment on your new home. And if you're going to use money from your wedding gifts towards the down payment on the home, you can do that. But if it's within a 2-month period of receiving those deposits, we're going to look at the source of the deposits and be able to actually see where they came from. So if your wedding guests gave you checks or sent you money through Zelle or Venmo, and it can be documented where the money came from, we can absolutely use that towards the purchase of your home. Where it gets a little bit choppy is if they're cash deposits. So cash cannot be used towards a down payment because it can't be sourced. So what we can do is if you have cash and it's been deposited to your bank account, We can wait 2 to 3 months until we have bank statements that don't show the cash deposit. That's called seasoned funds, and then you can use that money towards the purchase of your home.
Can I be approved to buy a home if I'm new to the country?
Yes, we have programs that allow us to give financing to people who are just coming into the country. Maybe you don't have any credit history here yet. We can build alternative credit history for you to qualify you for a mortgage. And then we're going to look at what kind of documentation you have for citizenship. And if you're just moving here, you'll need to have a Social Security card and Social Security number of your own. A lot of times it's easier if you've been hired on with an employer here in the United States. They're going to help you get the Social Security card, and they're also going to help you get citizenship. You might have an acceptable visa, or you may even have what they call an EAD card from your employer that is acceptable for us to qualify you for a mortgage. If you don't have any of these, we do have loans where we can qualify you with an ITIN number and use your credit history from that ITIN number.
Could you explain the difference between conventional and FHA loans?
Yes, this is a common question that we get. So conventional mortgage versus FHA mortgages. Conventional mortgages are going to be the most common mortgages. They've been around the longest, and it's what most people have financed their homes on for many, many years. However, the government came out with an FHA mortgage to help people be able to buy homes who weren't able to qualify for the tightened standards of conventional mortgages back in the day when you used to have to have a 20% down payment and perfect credit in order to be approved for your mortgage. FHA came out and allows people to buy more homes without having absolute perfect credit or 20% down. Times have changed a lot, so now conventional loans can still finance people without having perfect credit, and they actually offer a minimum 3% down payment to many home buyers. However, FHA does require a 3.5% down payment, and although there are reasons where you may want to go with an FHA loan over a conventional loan, they are more expensive, especially the insurance that you're paying for to protect the lender based off of the risk factors. So talk to your mortgage consultant and see which one fits you best, but most likely you're going to want a conventional mortgage if you can qualify.
Could you explain PMI and why are my parents so against it?
Yeah, so PMI, which stands for Private Mortgage Insurance, it is an insurance policy that you will pay for that protects the lender should you default on a mortgage if you're putting less than 20% down. So something happens to you and you're no longer able to pay your mortgage, this insurance policy makes sure that the lender can sell your home and it doesn't take any losses on the home. It is required if you're putting less than 20% down on a conventional mortgage, and it's required on all FHA mortgages. However, a lot of people think, oh, I need to get to that 20% down because I need to avoid that mortgage insurance. A lot of times your parents really want to help out and try to get you there as well, because PMI used to be very expensive. However, times have changed, and now PMI can actually be very inexpensive, even with very low down payments such as 3 or 5% down. Especially if you have really good credit scores, your PMI is going to be even less expensive. So before you wait too long just trying to save money to avoid that, talk to your mortgage consultants and get some real numbers. You might be surprised how affordable it can be.
Why should I get a second opinion when I hear that it can negatively affect my credit score?
Yeah, you should always try to get a couple different opinions on your financing for your new home and getting pre-approved. And the reason for that is because banks and lenders may have some different products available to you, and they may tell you different things or offer different levels of information. So you always want to talk to multiple lenders and get a feel for what options are available through each one, what their interest rates look like, compare them to each other, and just make sure that you're getting all the information that you can to make sure you're making the best decision on the financing for your new home.